What is your outlook for this next meeting? Do you see a pause, a so-called hawkish pause, maybe even a rate hike?
So I'm not as convinced as the market that a pause is baked in. You just said the market is pricing in an 80% expectation of a pause. I actually think it's a 50-50, very, very close call. But most importantly, the big picture is even if they do pause, as we've seen with other central banks, that does not mean that they're over. And so the market should, I think, brace itself for a Fed that is going to continue to be hiking, even if this one happens to be a pause. And I think the pause here is really a closer call than the market currently expects.
You know, Roger, that really is a contrarian opinion. I haven't heard a lot of people say that. I think some people even believe we may see a cut later on in the year. So what's giving you the sense that we could see a pause and then another hike? Is it some data point coming out later this year?
No, it's the data that's already out.
Okay.
So labor markets continue to be tight. Approximately 1.7 to 1.8 jobs for every unemployed person, far higher than the norm. Wage rates continue to go up, both in terms of what's measured in the big numbers, but what I'm hearing anecdotally from fellow CEOs. And so I think overall the picture is one of inflation and inflation pressures that are higher and stickier than the 2% number that the Fed has been aiming for. So I think it's the data that's already here that's telling us more hikes on the way.
Yeah, it'll be interesting to get that inflation report the day before they make the decision. I want to ask you about another big macro thing right now. What's your outlook on the possibility that the U.S. avoids recession? Goldman Sachs finding a more than 70% chance we avoid one. But then you look globally. At the same time, China's having economic issues. The Eurozone is in recession. What do you think could possibly be different for the United States?
There are a couple of things that might be giving some hope for a probability of a soft landing. One is that consumers here continue to be relatively robust. There is what's called a wealth effect. So equity markets actually have done pretty well in the first half of the year. As I already indicated, wage growth still expected to be relatively strong. So those are some of the things that are positive for us. I think the things that might lean towards more of a slowdown and maybe a short and shallow recession, basically as the Fed has more work to do, and with inflation being sticky, possibly having to raise rates and actually force us into this short and shallow recession that others have been predicting. So I am still in the camp that a recession is a real possibility. Short and shallow, one hopes. But, let's see, and let's hope Goldman is right.
Well, Roger, let me ask you, is a short and shallow recession, is that the same thing as a soft landing? And do you think that possibility is also priced in? That there could be an economic downturn, just not a full-blown recession, and the markets are still moving higher?
Yes, I think that's also a possibility. I've seen some economists to throw in a new phrase, talking about a growth recession, which is, growth underneath potential, but not yet dipping into those negative territories. So we're now making sort of fine distinctions: growth recession, soft landing, short, shallow recession. All those things sort of have the same feel, which is, whether or not you get a technical recession call is frankly less important than the fact that growth will be far below potential, which is what's going to be called for to get inflation back down closer to the 2% target.
All right, so you mentioned the market should possibly prepare for another hike later on this year. When do you see that hike happening? And I know you said the data is already out there, but we are seeing inflation decline. Why isn't that good enough? The Fed's also mentioned the banking crisis is something that's disinflationary. I think that's a word. But reducing inflation as well. So what's going to happen later that's going to give them the confidence to hike again?
Look, I think we've seen it in a couple of other of the central banks that were sort of early pausers. So the Bank of Canada and the Royal Bank of Australia, both, or Reserve Bank of Australia, both took a pause and now have returned to a hiking process. And the answer is that the labor market here continued to be very, very tight. Wages, which feed into particularly service sector inflation, are things that the Fed is still looking at. And so, it may well be that, one or two more hikes might be baked in. And I certainly do not expect them to cut later this year, as the market seems to expect.